how you are growing and what are the innovative ways of funding which you are using, so that the other people who are aspiring the entrepreneurs, those want to come to into NBFC space, or those are already there, they would learn that what are the additional tools for them for raising funds.
Let me start how our journey started and what are the challenges we faced. And I'm sure many other people who have started or planning to start will have similar kind of challenges. So we started somewhere in 2017. Very early 2018, we had to face IL&FS and subsequent journey, which was very difficult. Especially focus was on ALM, where people wanted that your book should be absolutely aligned as far as asset and liability. A gap is there. You should not have any gap. Somehow we kind of handled it. And by the time we could manage and come out of this, we had COVID phase 1, then COVID wave 2, and it was really very difficult. For us, it was a little more difficult, largely because we started our journey in Delhi NCR area, and in all metros, similar to Delhi, the migrant population was a little higher. So because of that, people moved out and went to native places. So it was difficult to contact them. Subsequently, we changed the model a little bit, and that is what I would like to explain also. We moved a little more to diversify in terms of location as well as the product, and also the business model which we were doing. So 3 things we did. Number 1, we felt that instead of having a very skewed location to, let's say, Delhi NCR or metro or certain locations, let's diversify to multiple locations. So we opened Rajasthan, MP, Gujarat, UP, some around 35-40 locations, so that we are not really concentrated to one location or area. And in each of these states, we are almost equal in terms of business. That is one. Second was we created a mix which was largely oriented towards small ticket micro secured loan segment, where we are servicing tier 2, tier 3, tier 4 towns to smaller business people, especially the people who are not having strong financial documents with them. So they may not have ITR, GST, banking, but they have a good cash flow in their business with a significantly higher profit margins which are visible. Within that, we also see that they must have one more stream of income, so they are not dependent on only one kind of business. Thirdly, we were earlier doing our business largely taking loans from banks or NBFC companies, which we call normally as term loan. But then we felt that this was not very scalable model, so we moved to from purely borrowing and lending to co-lending. Like Ashish explained, co-lending is largely 80-20 business, where larger partner, larger NBFC or bank will fund 80% of the loan and you contribute 20% of the loan. So we started on that. And then we also moved significantly to BC business. BC basically is co-lending in a 100-0 ratio, but then it works on FLDG model, where we take guarantee of the loan to certain extents. Now, the important aspect of FLDG is that if your business model, if your underwriting is good, then your loss is in a way limited to the extent of FLDG which you give. Of course, that 5 to 10% FLDG is significantly high. You can't afford losing that much money, but still you, from cash flow perspective, it makes a lot of sense. So these are the 3 things we have done. We have also kind of experimented with other debt instruments, like we have raised money by way of NCDs from individual retail kind of people, but they are through private placement. We have raised some amount by way of CCD, which are compulsory convertible debentures. We have raised some money by way of ICD, which is very small portion of our business. Now, from journey perspective, I guess last 2 years have been extremely good for us with reference to how our business has grown. The quality of portfolio has been significantly better, and AUM built up has been consistently growing up. Especially it is a segment where the loans are little longer duration. Let us say 5 to 7 years loan when you do secured business loans. So the repayments are little slower in a way. So your portfolio built is very good in that sense. We have got good amount of support from larger NBFC who have been our senior partners in this journey, like larger NBFC, Bajaj Finance, Euro Capital, etc., and some home finance company as well. So it's a mix from, I will say the first half of the journey was a bit difficult, but post that, it has been quite a good journey from our side. we are focused only and only on MSME. We don't do any other segment. We do a little bit of electric vehicles, EV loans also, which is largely in, I will say, UP or MP states. These are the two segments we currently are doing.